So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Hello, everybody. Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We have great guests on every time who come on and share their expertise so we can all level up, make a bigger impact. My name is Brett Swarts, and I'm joined today by Michael Malloy. He's the founder and chief advisor of EWP Financial, a global leader in expanded worldwide planning and private placement life insurance. He has over 40 years in the insurance and financial services industry, and he has built a reputation for delivering innovative cross-border solutions for ultra-high net worth families and so much more. Please welcome again to the show, Mr. Michael Malloy. Michael, how are we doing?
Good. Thanks for having me, Brett.
Absolutely. Yeah. For our listeners getting to know you for the first time, would you give us just a little more about your story and your current focus?
Well, actually, I started out in property casualty insurance, and that kind of morphed more into life insurance and dealing with high net worth families. And then kind of in the early 2000s, we started going more international, although we still do quite a bit of domestic, and concentrating almost exclusively on private placement life insurance.
Excellent. Let's dive right into that. What is the number one secret for ultra high net worth families with private placement life insurance?
Well, they're able to engage in both advanced tax planning and advanced estate planning all in one structure. It's in the U.S. context, you might see it as an unlimited Roth IRA with added benefits. Like if it's structured correctly, it's excluded from your estate, and you get enhanced estate planning because the jurisdictions we deal with mostly are offshore, so it's very hard for a creditor to pierce that veil.
Excellent. So the big problem people are facing is, above that 30 million married mark or 15 million single, right? The state death tax. So walk us through, let's say someone's worth $130 million, or they have a big business or real estate property in New York, and they own it free and clear, and they're fully depreciated. And they go, I got a big estate tax, Michael. What would be kind of the steps to helping them out?
Well, first of all, we do something similar to what you do in terms of your focus on capital gains tax. So the first hurdle is getting the assets in a policy. So if it's owned free and clear, there's fewer impediments as if it was mortgaged. But we still have to address capital gains tax issues. So what we do, when it's involved, we do something similar to the Deferred Trust, an ILET with a sale for a note. And so we spread out if there is capital gains tax, we spread it out over a number of years. We don't use the one the IRS has come down on in recent years, where you don't pay any state tax, and then you have a 30-year balloon payment at the end, hoping that the asset's growing, so then you can pay this all off at the end. We don't want any of our clients on the front page of the Wall Street Journal. So that's so once the assets are inside the policy and it's owned by an irrevocable life insurance trust, the assets are not subject to estate tax. So it's actually fairly simple at that level.
Okay, excellent. So it sounds like get the assets into the policy. So if I had a $130 million business in New York, California, wherever, right, big tax state, do I sell it or transfer it while I still own it, or do I wait for a buyer to show up, or what's kind of the process there?
Well, there are kind of two main rules with the IRS for private placement life insurance. One is diversification. You have to have basically 5 different assets in the structure, which usually is not a problem for most clients. And the other is called investor control. So there's no hard and fast investor control doctrine, but what's come down with private letter rulings and different pronouncements by the IRS is that you can't micromanage your account. You have to have an outside investment manager. So for an ongoing business, you have to, in a certain sense, you can't be actively managing the business and have it inside the policy. We have to create some structure whereby you're not the active manager. So that's basically, for portfolio investments, stocks, bonds, or hard assets like real estate or collectibles. That's not usually a problem. But for ongoing business, we have to do a bit of a structuring to be able to get it in there.
Okay. And so do you have to have a buyer lined up, or no? You can just transfer it while you still own it, or do you have to actually have a buyer ready to buy the business or the real estate?
Well, usually it goes into a trust, and the trust becomes essentially the buyer.
Okay. Got it. So you don't need a third party buyer. You're just going to sell it to the trust, and the trust is going to show up with cash.
Correct.
Okay. Where's the trust going to get the cash from to buy a $130 million business?
Well, in a sense, the asset becomes part of the trust, but the insurance company becomes the beneficial owner of the asset.
Okay, interesting. Yeah. Okay. How many of these have you guys done now, Michael?
Well, since we concentrate on the kind of ultra high net worth market, we probably do only between like 5 and 10 contracts a year. But I mean, we've done it now for almost 20 years.
Excellent. And then how many audits have you guys been through?
None.
Okay, no audits. Okay.
If you follow the rules, it's a structure that's very well codified in the code.
Interesting. Okay. You know what the worst thing to do is when you're selling a business? Paying huge capital gains taxes. In fact, they're about 20 to 50% of the sale. And if your client is selling, whether you're a business broker, M&A advisor, financial advisor, they have a large capital gains tax problem. And guess what? We have a solution. We build capital gains tax solutions for sellers of highly appreciated assets, including real estate, including businesses and other assets. And we want to encourage you to take action today to learn about what solutions are available. So think about a business, think about real estate, think about other assets that have at least $1 million net proceeds and $1 million gain, and the sale is going to result in 20 to 50% in tax. So what can you do? Well, you can build a capital gains tax solution with our team. Go to capitalgainstaxsolutions.com or click on the link below to get started. And what else about it that's really beneficial, just so everyone could understand? What else is like a benefit that you like to really point out?
Well, the most powerful one is tax, and then both income tax, capital gains, and estate tax. And then the second down the line is minimal reporting. There's no more, if you have stocks or related investments, there's no more K1s. You're, there's very, in terms of your tax return, basically the IRS doesn't even know you own a PPLI. There's so little reporting on it.
How do you report it to the IRS on the transfer of the sale?
Well, because of the lower cost and better structuring, we deal with mainly offshore companies. So you basically say you have an offshore asset and you report one number, the total cash value each year. You don't have to report any of the individual underlying investments.
Do you think the offshore increases the risk for IRS compliance or
No, because basically you're following all their regulations. You're making the report that you do have an offshore account, and you're giving the number. And basically, if they dig further, they see you have an offshore life insurance policy, and you're following all the rules. So to date, we've had no problems.
Great. And how many total have closed to date?
Oh, I don't know. Done, I don't know, 75. Some
Okay. And what's the largest one you guys have closed so far?
Probably, say $500 million.
Okay. So one deal was about a $250 million or sorry, $500 million?
Yes.
Okay, right. And it wasn't audited and it's in the clear. And so, and it wasn't, you don't necessarily report it to the IRS. That sounds, it sounds pretty magical, Michael. I don't, what else to share on this one?
Well, the investment advice I give almost all clients is if you don't understand it, don't do it. So we try to explain everything to the client before they move forward. So we want them to be, we want it to be totally transparent. When I can remember the first so-called illustration I saw was, it's just an Excel spreadsheet with maybe 10 columns, and every penny is accounted for. So in terms of traditional U.S. life insurance, that's certainly not the case. Like with whole life insurance, you can't understand, you can understand very little of the internal workings. And even on a UL policy, you don't understand all the
Got it.
fees.
Is there a trustee, and who's the trustee is?
Well, like I said, in terms of real estate, it's kind of like, most real estate is held by an LLC, and in this case, the role of the LLC is the insurance company. So,
Okay.
so the offshore jurisdictions have something called separate account legislation. So if the insurance company was unfortunately to go bankrupt, your assets are segregated in what are called separate accounts. They're not part of the general account of the insurance company. So a creditor of the insurance company doesn't have access to any of your investments. So it's completely segregated. So in one sense, what you're doing is your current accounts, let's just say portfolio investments, are managed by an investment company. So basically, you're just instead of your accounts being managed by an investment company, they're managed by an insurance company. So it's kind of recharacterizing the ownership.
Okay, so is there a trustee or not?
No.
Okay, and so the insurance company is the one overseeing the investments?
Yes, but you have your own independent asset manager between you and the insurance company. So that's your go-to, just like if
Okay.
you had an accountant.
Can you go back into other businesses or other real estate of your own, or do you just kind of set it and forget it with them?
Yes, because in the framework of these policies is called a variable life insurance policy. So inside one of these policies, you can transfer assets, buy and sell in a tax-free environment. So you can sell real estate, buy other real estate, all within the same structure.
Okay, interesting. And we're speaking with Michael Malloy. Everyone, you can learn more by going to expanditworldwideplanning.com, expanditworldwideplanning.com. What question haven't I asked you, Michael, so far that I want to make sure I ask you or you can answer?
Well, I think you just said it there. If someone wants to learn more, they can go to our website, ewp-financial.com, and we have lots of material, lots of videos, lots of explanatory educational material.
Yeah, sounds good. You ready for the lightning round?
Sorry?
You ready for the lightning round?
What's the lightning round?
Here we go. What's the top book you've recommended the most in the past year?
The top book, gosh, that's a hard one. Well, what about my book?
Sure. What's your book? Go ahead. What's your book?
Well, there are two of them: The Wit and Wisdom of Professor PPLI and the PPLI Papers.
Excellent. Question number 2. What are you most curious about right now?
What am I curious about?
Yeah.
Well, I'm actually reading an interesting book by someone who in the 1960s passed away, and she's kind of channeling her thoughts on the afterlife to her good friend. So it's kind of it opens up a whole new kind of interesting way to look at death, as opposed to, like, my upbringing is Catholic, so and I was an altar boy, so a funeral was a pretty, as altar boys, we didn't like to go to funerals and do the funerals. Mm-hmm. So this opens up a kind of a bit more expansive, hopeful idea of the afterlife than I was brought up with.
All right. Thank you for sharing that. Maybe the next question, number 1 leadership quote or theme that you strive to live by?
Well, from Aristotle, from Socrates, to thy own self be true.
Excellent. And the last question, Michael, and then we'll wrap up the show. How do you best keep a mindset of stewardship over ownership?
Stewardship over ownership. To manage things more with your heart than with your head.
Good. That's wisdom right there. Michael Malloy, I want to thank you for being on the show and sharing your wisdom with us and a little bit about your service that you provide. For our listeners who want to get in touch with you, one last time, what's the best place to find you?
EWP-financial.com.
Excellent. Thank you, Michael, for being on the show. I also want to thank all of our listeners for listening to another episode of the Build to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast and YouTube channels. And we're on the journey with you to scale from millions to billions. So we get more all over the way to help MVPs, the most vulnerable people. My name is Brett Swarts. I appreciate everyone listening out there today. And we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.